This is just the format of the presentation. I'm just going to briefly run you through the financial highlights. We're going to talk about the divisional performance, talk about some of the things that we focus on. I think you as shareholders would want to know what our return and trading statistics look like, and then we'll give you a couple of concluding remarks. So the structure of the firm hasn't really changed in the last 15 odd years, and the original idea was that we want highly focused businesses. We feel that we started off with low market shares. That hasn't really changed. And we operate in highly fragmented industries. And to exploit the opportunity, what we wanted to do was to scale the businesses. And that's a complicated task. And you do it through continuous improvement, and you do it through a process of marginal gains. And I think what has been the benefit of the structure is stability. When you operate in an environment that's highly uncertain, both here domestically and also internationally, and you can have a stable structure, it gives you comfort that the people that you work with, and it gives you a combined focus and effort in terms of what you want to try and achieve. Now, the key differentiation of the firm has always been our distribution network. This is our advisors. This is more than 1,000 advisors that operate in 260 offices. And in order to exploit the market shares that I spoke about earlier, clearly the advisor base is at the front end of that. What we try and do in the rest of the business is to enable these advisors to spend as much time as we possibly can in front of their clients. And we do that through very heavy investment in technology, infrastructure, and so on. I should just say, the actual total spend in the firm in terms of technology over the course of the last 3 years was 3 billion rand. In the last year, it was 500 million rand. It's an increase of roughly 19%. So that consistent investment has given us competitive advantage and helped us to scale the firm over a long period of time. So this is just the characteristics of the firm. We're equity market dependent. South Africa's got an equity culture. We've got administration businesses. We're not particularly balance sheet intensive. We've got loads of free cash flow. And then, of course, because we've got loads of regulatory licenses, we'll always be vulnerable to regulatory change. Just before I talk about the results, this is just a backdrop. Of course, our year end is 28 February. That's what the FY 2025 represents. So you can see what's happened to the rand over the last 3 years. Of course, during March and April, that moved out all the way to 20 rand to the dollar. Recently, it's come back. I think it's just under 19 tonight. The bond index gave you a return of 18%, somewhat surprisingly, given the backdrop that you had with difficult circumstances in South Africa. The Johannesburg Stock Exchange gave you 18%, 13% for the S&P in rand terms, the property index 13%, and 8% for cash. So more or less, as I said, if you're an equity-dependent firm, and you have a tailwind from the markets, that's clearly beneficial to the results. So here's the results. You can just see on the third column from the right the actual percentage gains. So recurring headline earnings was up 23%. You see that we've reduced the share count, the average share count, by 1% during the period, leading to an overall increase in headline earnings per share of 25%. I think the other feature of the results, if you go all the way back to 2021, the headline earnings per share was 50 odd cents. And 4 years later, we're at 100 odd cents. So we pretty much doubled the earnings during the course of the last 4 years. And of course, that's against the backdrop of punishingly difficult conditions in our domestic market, and also to some extent in the international markets. Our assets under management grew by 16%, assets under administration by 19%, and then the premiums by 9%. This is just a divisional performance. So wealth, which has really been the bedrock of the firm, that's the largest part of the firm. We have roughly about 650 advisors in that business, has systematically grown earnings per share. It's been double digits even during COVID. So So it's really the stalwart of the firm. Our asset management business had very, very good results, up 37%, just under 300 million rand, a very significant number. And then our insurance business that went through a relatively difficult time in 21, 22, 23. Of course, you had catastrophic claims, you had the kind of last ends of COVID and so on. That's recovered quite strongly after we've had repricing of premiums. And then also, particularly during the second half of the year, we had much better climate and other conditions in our markets, leading to the overall 23% that I mentioned earlier. A lot of detail on the slide. This is always a slide that Yanni wanted to look at. Basically interested in not one-year performance. Anybody can do well over a single year, but to do well over multiple years is really what the challenge is. The first line I'd like you to focus on is just the recurring headline earnings per share. And when you cast your eyes, starting from 2015, basically in every single one of those years, we showed growth, sequential growth, including during COVID. And I think that speaks to the testimony to the strength of the franchise of the firm, the quality of the people that we have, and the continuous investment that we've made over long periods of time. The other interesting number to look at is just the return on equity. So the most recent return on equity is 26.6%. I'll show you numbers just now when you look at that number after inflation. Remember, inflation this year was 3.2%. And that basically means that you're generating almost 23% in real terms. There's not too many companies that can do that, not only in South Africa, but around the world. And then the last one is really the credit rating. Now, the reason why the credit rating matters is, first of all, we've had 4 credit rating upgrades, so that tells you about the quality and the strength of the firm. And if you can upgrade get your credit rating upgraded, it speaks to the quality of the franchise that you have and the sustainability of your earnings. So if you can generate high returns with good credit ratings, it means that your risk-adjusted returns that you're generating is excellent, and I think that's something that we're particularly proud of here at PSG. Let's just talk about the divisional performance. I mean, again, there's quite a few numbers here, but the line I would like you to focus on is on total managed assets. 355 was the start of the year. The markets gave us, give or take, 35 billion, 34.3 to be exact. And then we had inflows of almost 20, just above 20 billion, 20.5 billion to be exact. So the increase during this period was more than 55 billion. And that's a huge number in the context of the South African market, leading to total assets under management almost 4.9 billion, which is a 15% increase during the period. This just shows you how it moves over time. So the last 2 years, last 6 months, the 2 periods, H1 2025 and H2 2025, that combined is that 20-odd billion that I was talking about earlier. But if you go back over time, during this period, which is roughly a 5-year period, we took in net assets of almost 90 billion rand. I mean, it is really a fantastic number. And again, I mean, it speaks to the fact that we've got a wide, high-quality advisor base who service the clients where they reside, backed up by strong systems and infrastructure, providing competitive advantage and delivering what clients actually want. We don't stand still. I mean, this is the advisor count. So if you go to the far right-hand side, 27, and this is on a net basis because some advisors leave us, some join us. On a net basis, we gained almost 27 advisors. And the reason why this matters is not only because they provide us with assets, but because it speaks to PSG as an employer of choice. What is happening is that advisors, IFAs, people around the market realize that here at PSG you can have a win-win situation. You can own your own business, but you aren't burdened by the administration that is involved in servicing clients. I mean, just to give you an idea, to service a client across the wealth business end to end, and of course all the clients don't buy all the same products, have the same solutions, follow the exact same advice process and so on, but we have 334 individual documents, many of those documents running into 20 pages or more. In the insurance business, we have 102 documents. It is a huge administrative burden, and if you can help your advisors with that burden, and they can spend their time in front of clients and dealing with those clients, then that's a huge competitive advantage. And that is why advisors come to PSG. And they come to PSG from a variety of institutions. Not to embarrass those institutions, I won't mention their names. Just in terms of the asset management business, I think the numbers to focus on is, again, the total assets under management, the 51 billion. The market movement was 4.4 billion. The net flows is 4.5 billion, leading to 60 billion. And again, if you add that up together, it's almost 10 billion that's been added during the course of the year. It's a number that we are particularly proud of. Of course, during the COVID period, we went through a difficult performance period with our asset management business. But during 2022 and 2023, we recovered most of the underperformance in the 20 and 21 year period. And the 3 and 5 year returns across all of our funds are now in the top quartile. And we're back to our winning ways, winning multiple awards again in all the industry surveys. And most recently, in a climate when many of the asset managers are reporting outflows, particularly because of Reg 28 changes and money moving offshore, is a number that we're particularly proud of. This is just the long and the short-term returns. Of course, the short-term returns are volatile. If you want to ask us questions on that in Q&A, we're happy to deal with it. But what we focus on is the 5 year numbers, because that's really what clients care about. This is just our insurance business. So what you can see is that we've grown quite substantially over the last number of years, both in distribution, administration, and also in Western. And I think the thing to say here is 5 years ago, we bought Absa's broking business. We acquired about 170 advisors. A lot of those advisors were in the personal lines area. If you go back to our premiums, where we're growing quite rapidly is in the commercial space. That's where we're showing double-digit earnings. But in the personalized space, it's been a lot more competitive. And we had to restructure the business from a personal lines basis. But I think we've bottomed that out now. And I'm quite confident that also in the short-term insurance space, as we grow our commercial business, that our advisor count will pick up. This is just Western National. Before I start wrapping up, this is the last slides of the business divisions. On the far right-hand side, you can see the very, very good returns that we generated in the second half of 2025. So it was really, people talk about a perfect storm, but this was a perfect victory for us, because at the same time that our underwriting margin opened up, the markets provided very good returns. And you can see that overall, we generated a very good underwriting result and also very good investment income. So just, starting to wrap up, before we take questions, the key thing about successful firms is you have to grow the top line. If you can't grow the top line, you don't have capital to be able to invest in your underlying businesses, and you can't invest. And no matter what the circumstances, no matter which of our divisions, we've been able to show sequential growth. Year after year, 22 on 21, 23 on 22, 24 on 23, and 25 on 24. And I think the reason why this also matters, because lots of financial services companies have shown better results over the course of the last period. But the problem is that they've done that through cost cutting. They've not done that because they've grown their top line. And that's why we're particularly proud of this number, and that's why we will continue to focus on it. Now, investors always say to us, how do you manage risk? How is that reflected in your numbers? Our performance fees this year was give or take 3.7% of overall fees. In some years, in 2022, when as our asset manager was recovering, it can get to almost 10% of overall returns. But as you can see, I think it's a relatively modest percentage of overall earnings. The balance of our earnings are high-quality earnings, which for the most part are reoccurring in nature. On the second slide, you just see what's happened to our margins. Now, our margins have opened up in the current period, and we show it before and after performance fees. And then on the far right-hand side, you see the return on equity. Now, the interesting thing is PSG has got zero debt. So that, I think, is the other key feature. I mean, to be able to generate high returns on equity when you're investing heavily and you've got a strong capital base with zero debt, I mean, I think that speaks to a resilient firm, and that speaks to a firm that's geared to perform in all kinds of markets, whether it's difficult or easy markets. It gives you that stability, and it gives everybody, it gives the advisors, and it gives the core staff confidence in difficult conditions, and it also gives our clients confidence in difficult conditions, and after all, that's why they want our advice. This is just the return statistics. So the third column from the left is just if you invested 100,000 Rand in PSG and reinvested the dividends over that 20-odd year period, you would be worth, give or take, 10 million Rand today. By the same token, if you did that on the Johannesburg Stock Exchange, you would have generated about 1.2 million. But I think the key number that we always look at, the board and I, is the returns in dollar terms. So compound over that period, the Rand return was 25.8% and the dollar return 19%. Now, there aren't too many companies around the world that can generate those kinds of returns over a long period of time. And you can see that the dollar returns in 24 was 15% and the dollar returns in 25 was 27%. So again, it speaks to a very strong company with a good client base, and that's actually reflected in market performance. And then the final slide, very complicated slide, but all you need to focus on is the last three columns. So the third column from the right shows you the return on equity. So what you want to worry about is, can you consistently deliver, even in difficult circumstances, returns that's above 20%? And you can go back through punishing periods, 2009, 2010. You can go through Nenegate. You can go through the Pravin Gordhan firing. You can go through COVID. No matter what those conditions, we've generated returns on equity of give or take 20% or above. On the second column is just a sanity check. What is the inflation rate? And can we generate returns not just in nominal terms, but can we generate it in real terms? And then the far right just shows you, if you deduct inflation from the return on equity, what's the kind of numbers that you generate. And as I've mentioned, this is the number over here that we are particularly proud of, because what you're able to show there is 23% return in real terms, bearing in mind that you're doing it at a peak period in your investment in the firm. And actually, it's a consistent investment over a long period of time. So I think the other feature of this 23.4%, if you go back over time, and you can go back as long as you want to, that's a record achievement in the firm. And so that's something that we are quite proud of. This is just the trading statistics. So, I mean, increasingly, after the unbundling of PSG Consult, then PSG Financial Services now, from PSG Group, we've got an open shareholder list. And so increasingly, our liquidity is improving. But just in conclusion, I mean, I think this advisor network, this competitive advantage that we have, is something that we nurture, and is something that I think makes PSG unique and certainly envied by our competitors. There's very strong governance structures, which is reflected in the numbers that you've seen. We've got clear growth opportunities. We've got low market shares. We're scaling all the time. We're growing very quickly. And despite the very heavy investment that we're making, we're generating record returns on capital, I should say. We've got a history of superior shareholder returns in both nominal and real terms. And then the key thing that we focus on is we acutely aware that we want to restrict share issuance. In fact, we've been buying back stock almost 8% over the last 5 years, almost 90 million shares, because we're very, very focused on earnings on a per share basis. And we're also reflecting on the capital numbers that I showed you, not just the capital ratios, but the ratings. We're very, very focused on earnings per share on a per risk unit basis.